2025 was a strange year for Bitcoin. Bullish headlines everywhere, historic OGs selling, and month after month of boring sideways chop that tested conviction. It felt like a market going nowhere until you step back. What looks like stagnation may have actually been redistribution. What looked like pressure may have been the last of the whales exiting into deep demand. And while price moved sideways, a tax scandal in Minnesota didn't just spark outrage, it exposes a system that survives by extracting more every year, and is finally pushing people too far. Tonight we're connecting that revolt, the invisible tax of inflation, the OG selling everyone's been watching, and the macro signals lining up for 2026. Because if this really has been one long handoff year, what comes next for Bitcoin won't be gradual, it'll be obvious. Welcome to No Second Best, the show where conviction meets reality and reality points straight to Bitcoin. I'm your host Hurley. Now let's get into it. This week's taxation outrage didn't come out of nowhere. It started with the massive fraud case in Minnesota involving federally funded daycare programs. Money that was supposed to help low-income families and children. Instead, that money was siphoned off through fake meal counts, shell nonprofits, and inflated invoices. Millions meant for childcare were quietly rerouted to insiders, luxury cars, real estate, personal lifestyles, while working families paid the bill. But what makes this different isn't the details, it was the reaction. In the wise words of Marty Bent, it's becoming clear to millions across the world that taxation isn't just a policy, it's a humiliation ritual. You work, you comply, and then you watch the system leak money upward and outward while telling you it's for your own good. This isn't left versus right. It's ruled versus extracted, and it's how our financial and monetary systems are designed. I came across this TikTok this morning, and I think it captures the mood right now across America.
Hear me out. You work for an entire year, you pay 24% federal tax, 5% state tax, that's 29% tax already. 29% of the year is 106 days. You're literally working 106 days for free before you even make $1 for your family. That's about how many days politicians actually work. Go to work, taxed. Save your money, taxed. 401k, taxed. Pension, taxed. Buy a car, taxed. Drive that car, taxed. Put gas in that car, extra taxed. Buy a home, taxed. Want to sell a home, taxed. You want to eat some food, taxed. Want a little drinky drink, taxed. Want to go fishing, taxed. Want to go shopping, taxed. Invest, taxed. Inherit, taxed. Die, you guessed it, taxed. And for what? To fund illegal migrants, foreign wars, and families scamming the system? Please! It seems we're in the land of the taxed and the home of the freeloaders. I think it might be time to spill some tea or something again.
Income taxed, savings taxed, spending taxed, property taxed, inheritance taxed, death taxed. It feels suffocating. But here's the uncomfortable truth. This video still understates the damage. Because as Zuby pointed out on X this week, most people only count direct taxation. They don't count inflation. They don't count lost purchasing power. They don't count the compound interest you never get to earn. When you add all that up over a lifetime, you're not just losing 30 to 40%. You're losing more like over 90% of it. This isn't about bad actors. It's about a system that requires more extraction every year just to survive. Which brings us, of course, to Bitcoin. Every year, there's one investor letter that quietly circulates through the Bitcoin world. Not because it's flashy, not because it has price targets, but because it's written by someone who actually understands what Bitcoin is and why it exists. That letter comes from Ross Stevens, the founder of Stone Ridge and the parent company of NYDIG. Ross Stevens isn't a Bitcoin influencer. He's an allocator, a long-term thinker, someone Wall Street actually listens to when he speaks, even if they don't say it out loud. And in this year's Stone Ridge letter, he lays out the clearest case I've seen for Bitcoin as a system upgrade, not a trade. Ross writes, 87% of humans today were born into a monetary system without a reserve currency, and also without democracy, rule of law, or property rights. Bitcoin wasn't built for people arguing about rate cuts on Twitter. It was built for the majority of the world, people born into systems where savings don't survive, money is political, and exit simply isn't an option. That's why he's so blunt about fiat money. He says, quote, "Nothing produced limitlessly and for free can ever eventually have value. Fiat is always and everywhere a Ponzi phenomenon with seigniorage. the state's irresistibly silent Madoff-like pitch. Bitcoin, its kryptonite, will never take the meeting. That's a scathing description of how the system works. And suddenly, the tax outrage we talked about earlier makes a lot more sense. People aren't just mad about corruption. They're waking up to the fact that inflation isn't an accident. It's policy. It's how the system funds itself without asking permission. And then Ross goes even further. He writes, "If you don't hold Bitcoin, please step out of line. This line is for people who have money, not fiat credit." That line is supposed to make you uncomfortable, because under an inflationary system, money becomes conditional. It can't be frozen, diluted, confiscated, weaponized. Bitcoin is money that doesn't ask. And that's why this next part matters so much. Ross then quotes Human Rights Foundation CSO Alex Gladstein, saying, "Bitcoin has evolved from a humanitarian tool to a vital means of resistance." This isn't theoretical. In places like Venezuela, Bitcoin isn't about number go up. It's about survival, getting savings out, funding escape, bypassing frozen accounts. That's why calling Bitcoin speculation misses the point entirely. Speculation is optional and it exists from a point of privilege. Exit is a means of survival. And then, near the end of this section, Ross distills the entire thesis into one sentence. Bitcoin has a use case: human rights treasure. Not ETFs, not cycles, not narratives, human rights treasure. And once you understand Bitcoin this way, the price conversation changes. Because price isn't driven by hype. It's driven by the widening gap between a fixed system and an infinite one. And when trust in the old system starts to crack through taxes, inflation, corruption, and extraction, that gap doesn't close, it just accelerates. And this is where Swan Private fits in. Because once Bitcoin works, really works, the questions change. How do families protect it? How do businesses hold it responsibly? How do you structure custody, inheritance, and long-term planning without recreating the very system Bitcoin was meant to escape? Swan Private works with high-conviction individuals, families, and companies who treat Bitcoin as long-term capital, not a trade. If Bitcoin is becoming part of your balance sheet or your legacy, Swan Private helps you to do it deliberately, securely, and correctly. Visit swan.com/no-second-best to learn more. Now let's talk about price. Because of course, price still matters. 2025 felt frustrating. There's no escaping that. Mostly because there was a huge disconnect between fundamentals, positive catalysts, and price expectations. But here's the key point that I think's become more and more clear as this year's gone on. Bitcoin doesn't follow halving cycle vibes anymore. And it's quite possible it never truly did. It's in the big leagues now. It follows liquidity and the business cycle. The 4-year Bitcoin halving cycle of the past just so happened to align with the 4-year business cycle. This time, the business cycle stretched. And when that cycle stretches, Bitcoin stretches with it. This is where tech devs' work gets interesting. Because if you're wondering why 2025 felt so underwhelming, these charts illustrate it really well in comparison to the business cycle. What you're looking at here is the longest runway Bitcoin has ever built without going parabolic. Higher lows, compression, and time passing. Historically, this kind of structure doesn't show exhaustion, it shows stored energy. Now this one is the key chart. The idea is that Bitcoin didn't follow the 4-year cycle because of the halving alone. It followed it because the business cycle just happened to run on roughly 4-year intervals. When the business cycle topped, Bitcoin topped. And when it bottomed, Bitcoin went into a bear market. Over the last 3 years, ISM never truly broke out. It had no sustained move above 50, no real expansion. So of course, Bitcoin didn't explode. Not because something was broken, but because the cycle never turned on in the first place. This time, the cycle stretched. COVID-era rate suppression extended US debt maturity. That delayed refinancing pressure. And it delayed the business cycle. So instead of a clean 4-year rhythm, we got something longer, flatter, and more frustrating, which makes Bitcoin's sideways action in 2025 make a lot more sense. Now this is where it gets interesting. This chart shows the first real inflection signal in nearly 5 years. Not on short-term noise, but on monthly and quarterly data. Historically, these signals don't make Bitcoin tops, they mark the beginning of runs. That's why 2025 starts to look less like a failed Bitcoin bull market and more like the final pause before expansion. Now all of this isn't proof, but it is evidence. And when you line it up with OG selling looking like it's finally easing and long-term holders starting to accumulate again, the setup for 2026 looks less speculative and more structural. Now one of the biggest narratives of 2025 was OG selling. So let's be precise about this. Matthew McClintock isn't guessing. He works directly with early Bitcoin holders and people actually selling. And here's what he said on Natalie Brunell's Coin Stories.
Well, we know that some OGs are loosening their diamond hands.
Yeah,
I
that's right.
wanted to get your take on that because I find some of the chain analysis really interesting, that those are the coins that are moving, but supposedly it's not unusual. We've seen this at previous cycle tops. But what do you make of it? Because if I had a ton of Bitcoin, I guess I would want to maybe sell some and enjoy my life, maybe purchase some things. Is that what they're doing?
Yeah, absolutely. I mean, again, they've already won. They realize that they've won. And they see now a very deep demand market for it. And so now the market can absorb a lot more coins than it's ever been able to absorb before.
And barely move the price.
And barely move the price. I mean, it might move it inside of a day, but the selling pressure is just not that great. So when we, our clients are some of the clients that are selling, but it's because they are selling for strategic purposes and they're selling in strategic ways. Because again, these are people who have accumulated a lot of Bitcoin.
What matters here isn't that some OGs sold, it's why they sold and what happened after. They weren't panic selling, they weren't losing conviction. They were diversifying, funding businesses, buying other assets, and planning their lives. And the market absorbed it and barely moved. That's the important part. Because if Bitcoin can absorb years of OG distribution without breaking down, that tells you something about demand underneath the surface. Now here's the real question. What happens when that selling pressure starts to fade? Because on-chain data is starting to answer that. After months of long-term holders distributing coins into the market, we're seeing a shift. Selling pressure is easing, and long-term holders are turning back into net accumulators for the first time since July. Historically, major Bitcoin expansions don't start when everyone's euphoric. They start when supply tightens quietly, and after sellers are done. And this brings us to the core thesis that ties this entire episode together.
When you have an asset that is scarce against an asset that is limitless,
Yes.
you will not help. You can't help but see the scarce asset climb in value as the bottom falls out of the limitless asset.
Right.
Bitcoin isn't just scarce.
Yeah.
It's fixed. It's finite. We've got a fixed daily supply. We know what the issuance rate is of Bitcoin, 450 Bitcoins a day. You can't make them any faster. You can't make any more today than you did yesterday. And that asymptotically gets closer to zero with every halving.
Yep.
And so it's like, okay, well, you have not just a scarce supply, but a fixed and finite supply. We have the Federal Reserve during COVID, Neil Kashkari from the Minnesota Fed said there is infinite money at the Fed.
Yeah.
It's like, okay. And we have the whole, back to the memes, we have the whole money printer go burr with Jerome Powell just cranking it. Okay. That is a stated policy of the United States Treasury Department. Okay. Well, if Bitcoin, this fixed and finite and increasingly scarce asset, as that gets priced in US dollars, and US dollars have infinite supply, it's not just that the price of Bitcoin is going up. The price of Bitcoin, the value of Bitcoin is going up while the value of the dollar is going down. Yeah. And so it's not just the price denomination value of Bitcoin, it's the gulf between the value of Bitcoin and the value of the dollar. And so we will see that do nothing but accelerate.
This is why Bitcoin's price goes up, not because of cycles and not because of narratives, but because a fixed, finite system is being repriced against an infinite one. And the longer that repricing is delayed, the more violent it becomes when it finally resolves. That's why 2025 wasn't just wasted time. It was a handoff. You can see this shift even outside of Bitcoin. Silver has quietly doubled since late summer, another signal that trust in paper money is cracking. But silver, like gold, still inflates. Bitcoin doesn't. That's why comparisons between the two miss the point. Bitcoin's next major move won't feel exciting at first. It'll feel uncomfortable. It'll be met with anger and disdain, and then it'll feel obvious. So zoom out. A system built on extraction is straining. Tax outrage is boiling over. Inflation is doing what it always does. OG selling pressure is fading, and the macro cycle is quietly turning. If 2025 tested patience, then 2026 may just test disbelief. Because if this really was the year of redistribution and the supply side is tightening, then what comes next for Bitcoin isn't about timing tops, it's about understanding why this asset exists in the first place. But now I want to hear from you. Do you think the OG selling pressure is finally behind us? Does the 2026 setup feel real or premature? And what do you think cracks first, confidence or the currency? Drop your thoughts in the comments, and don't forget to like this video and share it with those who are not yet accumulating at these levels. And of course, subscribe to the Swan Bitcoin channel if you're not already for more videos like this. Happy New Year, and I'll catch you guys in 2026.